Hey, Barry Burns here with part 2. Gosh, we've been doing a multi-part series here. Yeah, part 2 of candlestick patterns, Japanese candlestick patterns, when they work, when they don't. And today we're going on with the second part of pin bars. So, did a quiz on the last one. If you didn't get the last one, check out the link below in the description and you can go to part 1. So I'm not going to review anything of part 1 since that's already in part 1. So we'll just pick up where we left off. Now, we did a quiz where we showed you where these pin bars cannot work. When candlesticks go wrong, candlesticks run wild, where they're not doing what they're supposed to do. So, a couple of concepts here, and basically there's going to be 3 of them. There will be a part 3, by the way. So, the first part that I want to add to today is that you want to make sure that with candlesticks that you understand that they are short-term indications. Now, I don't use the word indicator because they're not indicators. They're plots of price, right? Price patterns. So they're not indicators, but they do a formation that shows us the imbalance of supply-demand at the end of that period of time. So for that reason, got to understand that. In fact, let's just pull this puppy dog up here so I can show you exactly what I mean. And this is one of the misunderstandings that I find that a lot of traders have. So we have a pin bar here, a bullish pin bar. And there it is right there. So wide range bar, narrow range real body, opens and closes near the top of the bar within the first quarter or at least third of the bar. So we've got that qualification or those qualifications, those rules, awesomeness. So that's great. Now, the second part of it, though, is we've got to understand that this is not necessarily going to be a long-term signal of what happens into the future. So this, now I pulled up a daily bar, or a daily bars, daily chart. And so candlesticks are not long-term indications by themselves. They are short-term indications. And literally, so they don't establish trend. That's one way of putting it. In fact, somebody even, by the way, I want to thank you guys for your comments and your questions and emails. It's awesome. I love it. So keep it coming. I really appreciate your engagement, and it helps me to learn, what questions are in your mind. So if you have any questions, whatever, type them into the comments below or send me an email at barry@topdogtrading.com. I love it. So one of the things I found is that people often think that a candlestick bar, one bar candlestick bar, is a long-term trend indication. It is not. Really, literally, all it means is during this period of time, now this is a daily bar, but whether it's a minute or 5 minutes or 60 minutes or whatever, it just means that's the dynamic of what the market participants were evaluating and finding value in the market during that period of time, with a beginning, with an end. So it has nothing to do with what's going to happen over the next 1 day, 2 day, 3 day, 4 day, 5 days, whatever, 60, 70, 90 days. No, not at all. Not even close. So they're not trend indications. Trend is a long-term move. All right, so that's step 1. They're short-term indications. They can be part of a long-term trend, but trend is determined by something else, not by candlestick patterns. So that's why on the last one, where we did the quiz and you could have gotten stopped out twice, that was not a long-term indication of what was going to happen. So that's step 1. Step 2 is then, we have to, before we use a candlestick pattern, such as a pin bar, we have to establish what the trend is. So when you create a trading methodology, remember, trading, profitable trading, is not created with any one thing. Not any one indicator, not any one moving average, not even any one candlestick bar. So before we do that, when we put together a trading system, we have to determine, okay, what is the trend? Because candles don't do it. So you need some sort of whatever you use for trend. I'm not going to go into that today because that's off topic. So first thing is you establish trend. Measure the trend objectively and statistically and mathematically. And then these candlestick bars, they're going to have significance in the direction of the trend and, subset of that, early in the direction of the trend. So, and in fact, we'll talk about, we're going to kind of split that into 2 parts and do part 3 of this video series, talking about when we trade against the trend. But today it's going to be with the trend. So if you trade early in a new trend, and that's the professional distinction, that's the dollars that are in the details, is when are we in that trend? Are we early or are we late? I mean, it goes back to the old adage, we all know, the trend is your friend until the end. So if you think about that, the learning moment of that really is, it's a mathematical model that the longer the trend continues, the less probable it is to continue. And we're trading probabilities. So therefore, we don't want to enter a trend as it goes on and on and on and on. We only want to enter early into a new trend. So the timing of that trend, how early you get in, is absolutely critical. And I only take trend trades when I'm in really early in that new trend. Okay, so that means that that's step 1, establish the trend of the market. Step 2, establish that you're early in that new trend. Now, step 3, when we get these pin bar patterns in the direction of the trend, remember that's a bullish signal, and we are in an uptrend. Okay, now this bar has more significance. It has more significance in saying that, yeah, now that is a more likely or probable situation for the market to continue going up. So it's the context of the chart. You can't just trade candlesticks in isolation. You take them at maybe part 2 or part 3 of your trading system. And part 1, as always, if you're trend trading, now there can be different market conditions, obviously, but if you're in a trend, only trade bullish candlesticks early in a new trend that's going up, a bullish trend. Only trade bearish candlestick patterns when you're early in a new downtrend. Because otherwise, yes, you will get stopped out. And in the last example, in part 1, you saw, if you remember it or you want to go back and review it, we were in a downtrend. And we were trading bullish candlesticks in a downtrend. And that's why they didn't work. So, very important distinction, and it's the only way to do it. It's the only way to do it. Okay? So, I think, you know what? That's going to be it for today. And in the next one, we're going to add the secret sauce. Oh, in part 3, I always got to leave you with a cliffhanger. In part 3, we're going to leave you with the secret sauce. So, but for right now, that's all the down-home country goodness I got for you. So part 3 will be coming out real soon. You won't have to wait too long. While you're waiting, go ahead and share this video with others. If you find these videos helpful, spread the love and share it with other good people. Also, get my rubber band trade. Absolutely free. And that is where I do put all the elements together. In these videos, I just teach you one principle at a time. But in the rubber band trade video, actually, it's a little series of videos, and I actually show you how to put all the different elements together to create a trading system about one trade, the rubber band trade, which is a very high risk-reward ratio, very high win-loss ratio, especially, though. The winners are way bigger than the losers, and I find that's what especially new traders need. Heck, it's what I need, and I've been trading for 50 years, and my brain cells still need a high win-loss ratio. I cannot deal with a low win-loss ratio, and there's no reason to. You don't have to. So get the rubber band trade, click the little eye with the circle around at the top right-hand corner of the video, or if you can't see that, then the link is the link is on that arrow right there. I don't think that's a clickable link, but there's the website. Just go to rubberbandtrade.com, and well, it's as easy as that.